Right, good afternoon, everybody. Welcome. We'll give another minute or so to let everybody file in. Okay, it looks like we're starting to level off in terms of attendees getting in. So happy Thursday, everybody. It is not the chapter leaders call. In fact, we are doing special training today and trying to find these instances where we've gotten questions and have opportunities to help our chapters. And we're really excited about having Wendy Speckerman today, who's going to conduct our volunteer financial review training as an alternative to a CPA audit or review. We are encouraging chapters, if those are not viable options for them, or if they would prefer to conduct a peer review training, a peer review of the financials for their chapter. And to give us a deep dive into how that works, we have our chapter finance director, Wendy Speckerman, with us, and I will stop tripping over my words and turn it over to her. So thanks a lot for being with us, Wendy.
You're most welcome. As Corey mentioned, the peer review is a way to save money and still be compliant with your chapter agreement, which requires a financial review or audit. This can be done by a committee of members of your chapter that are not involved on the board or in financial decisions in any ways. You could also use a single non-member, say from your community or another NAIFA chapter, perhaps from your cohort. The financial review by a volunteer and even for a CPA involves 3 different phases. First, you're gathering the information during the planning phase. Then in the review phase, you're reviewing your financials that have been provided, looking at the bylaws, policies, procedures, bank statements, testing expenses and revenue transactions. And then in the final phase, you are doing the reporting. This is when you're making recommendations to the board for any changes to their policies, or if you uncover something that causes the financial statements to be restated, you would report that to the board at that time. So during the planning phase, when you're gathering documents, this is a list of the documents that you're looking for from either the treasurer or the staff. You're looking for the year that you're reviewing, the very last review that they had done. Even if this is very old, it would be useful to the current reviewer. So please go ahead and provide that, even though it may be old. For the year-end financial reports, you would include the statement of financial position, which in the for-profit world would be like a balance sheet. The statement of activities report, which would be like a profit and loss statement. The full year general ledger, the accounts receivable report, accounts payable report, the balance sheet schedule. The balance sheet schedule, by that I mean if you have accrued revenue or deferred expenses or prepaid expenses, what makes up those balance sheet line items? A document that contains backup of that. You also want your approved budget, the bank statements along with their reconciliation reports for the 12 months you're reviewing, plus the first month of the following year. You'll need a list of the authorized signers for each account, the previous year's 990, investment policy, along with investment statements and reconciliation reports. And if there are any accounts that exceed $50,000 in value, you would want to complete a form to confirm bank account balance. Let me show you an example of that here in the next slide. There's a Word document on the chapter playbook audit page that you can download that's been approved by the Bankers Association. So it's a document that banks are used to getting and willing to complete. So you fill in the sections that I've highlighted there and then send it to the bank. The bank completes their double check at the numbers and then sends it directly to the reviewer.
Wendy, before we go on,
Sure.
we just got a question about financial statements being on an accrual versus cash basis. And I was about to note that we strongly recommend the accrual basis. Can you share with everybody really quickly what the difference is and why we recommend accrual?
Well, accrual-based accounting is what is recommended by GAAP, the generally accepted accounting principles. So it is just what is recommended for nonprofits as a whole. The difference really is that and it's most critical for the end of the year, that you have, like, if you don't get an expense or revenue that you were expecting for the previous year until the next year, but you want it reported in the previous year, you're able to do that. You're also, like, for members who pay on an annual basis, you're recognizing 1/12 of their dues each month. It more accurately reflects the benefit that you're providing to those members so that they match up better. It also smooths out your revenue for your dues so that it doesn't take a big swing when the renewals start coming in for those annual payers. That is really the biggest reason. So if you are on a cash basis and have no plans to change, although we do recommend it, then even in the cash, for cash people, you wouldn't have a balance sheet schedule, but you should still have an accounts payable and accounts receivable report that you would provide. So you would probably still have an inventory. And if you have equipment that you're depreciating, you would still have that sort of thing if it's a large capital item as opposed to something that just got expensed. So there are still some documents that you would need to provide in any case.
Excellent. Thank you.
Okay. From the chapter secretary or staff, you would obtain the board minutes. So the reason we're asking for board minutes is you're looking to see examples of, like, did the budget get approved? Did the board make changes to the budget? Did they release money from the reserve account to cover some shortfalls? Were new contracts approved by the boards? Did they make stipends for state or national meetings? You're really looking for things that you then will be aware of to look for as you're going through the rest of your review process to make sure that staff is following through on board directives and that the board is showing due diligence over the financial matters of the chapter. Then you'd want the current bylaws, financial policies and procedures, including the investment policy. I think maybe I mentioned that on the previous slide. Then new or updated contracts that were received during the review year, as well as a list of board officers and members, including their contact information, so that the reviewer or the committee feels free to go directly to board members and officers without going through staff. So when you start the review process, some of the things you're going to look for, I would normally look for this either in the bank statements or in the general ledger. Are there any unusual transactions? Like, did $100,000 get deposited in the account and where did it come from? That would be very unusual. Or you might have a related party transaction. That might be something like between a local chapter and a state chapter, a PAC and the state chapter, or if the chapter has a foundation, a deposit or expense paid to those institutions. You know, there should be a clear reason for those that need to be documented, and you can ask about those with the treasurer and the president. Then in the policies and procedures, you're looking for adequate internal controls. Is there a segregation of duties? Is one person opening the mail and getting the checks and making a log of them? Another person preparing the deposit? Perhaps another person making the deposit? It needs to be divided up at least between 2 different people. 3 would be better, but you're not always able to do that. Then you're also looking for things like account authorizations and signers. Are those up to date? Was I think we've already talked about the budget being prepared and approved by the board. Then was the budget actually regularly compared to the statement of financial activities or the P&L? Are you looking at those? And do you have that to compare along with last year's actuals for that same time frame? You want to make sure that the bank accounts are being reconciled on a regular basis. It should be monthly. And then are those reconciliation reports being reviewed by someone other than the person who did the reconciliation? And then if there is cash accepted, is there a policy in place to limit the exposure of the chapter? Like, are there 2 people counting the cash at an event and signing off on it? Is it locked up? Those sorts of things. Then when you're looking at the bylaws, really you're looking, is there anything in there that specifically spells out something financial, such as a review? Is that being done? Are they compliant? Is the chapter compliant in that area? And then for investment policy, are the current investments following the policy that's been put in place by the board? Then we get to the testing phase of the review. You're looking at the financial statements and the schedules. Are they mathematically accurate? Do the subtotals add up to the total? When you subtract the expenses from the revenue, does that figure match what's listed there? You're inquiring, and then like on the balance sheet schedule or the statement of financial position, does the asset, liability, and fund balance at the end of the previous year match the beginning of this year? You're comparing, for number 3 there, you're comparing the statement of activities to the budget in the prior year. If there's a variance of say 10% over or under the budget or activity from last year, that is something that would raise a flag that you would want to make an inquiry about. It could be that a program was budgeted for and then it was decided not to do it, and the budget just didn't get amendment, which sometimes happens. Or you could have started a whole new activity and maybe it wasn't even accounted for the previous year. Just something to explain those differences. Then on comparing the financial position to the balance sheet and supporting documents, that would be if you have something on your balance sheet or your statement of financial position, like accrued revenue or deferred revenue or accrued expenses. Does the schedule match what you're showing in your financials? Do you have backup for it? And then finally, you're also looking at the change in assets in the financial position report. Is that equal to the statement of activities net surplus or shortfall? I'll show you an example of that on this next slide here. So the one on the left is the balance sheet or the financial position figure, the change in net assets, and you'll see that it's equal to the statement of activities or the P&L total surplus, or in this case, it was a shortfall. So you want to make sure those are equal. Sometimes, usually if they're not equal, it's something like, oh, you've started a new program that you wanted to track separately, you've added a code for it. But it's so out far of the range of things that was previously set up to pick up your income on your statement of activities that it didn't get added. So that might be a reason it would be off. Or in our accounting system, when we add a new code, sometimes forget to put down what category does this go in so that it can be rolled into the financials. It's usually not anything malicious, but it's something that still needs to be checked. And if you did find a difference, this would be something that would require that the financial statements be reissued or restated. When you're testing the bank accounts, you're going to take 2 months and you're going to make sure that the bank statement ending balance matches what's reported on the reconciliation report. For outstanding checks, you're looking for anything that is in excess of, say, 30 days. And then you can sort of, if you could also then take those 30-day outstanding checks and look at the beginning of the next month or the next year when you have the January report. If I would particularly recommend that you for sure look at the 12/31 report if you're on a calendar year. Did those clear then in January? And if they didn't, they probably need to be followed up on. Like, do they need to be reissued because they got lost in the mail, which was happening a lot during COVID? But 30 days is about the cutoff. Then on the bank's response on the form to confirm bank account balances, do they match for those accounts that you sent to the bank that were in excess of 50,000? And then you're checking the first month bank statement of the next year for any outstanding items that are clearing, and that the beginning balance matches the ending balance of the previous year. And then you also might, especially if folks are on a cash basis, you want to make sure that there is no big expenditures that should have been in the previous year and that they just pushed off because they didn't really want their financials to look bad. So this is another reason why it's a good thing to have accrual, because then it's not as much of a concern because you can always accrue it back. Okay, it's not wanting to move here. There. When you get to testing your expense items, you're mostly verifying approvals in invoice documentation. You're going to be looking at, you want to do at least 10 of these, and this is the order that you do them in. 100% of the related party transactions, like between a PAC and a chapter, or a foundation and the chapter, or a local chapter and the state chapter. 100% of lobbyist and management payments, are they in line with their contracts? Or if you still have direct employees, is the payroll item in line with what you know their salaries are? 100% of major event invoices, this is probably your state conference, particularly the hotel bill, which is usually the largest expenditure you're going to have for the whole year. And I would say that sometimes not even the legislative days are that, might not even be considered a major event. Then you're also looking at any expense item that exceeds 20% of revenue, that if it hasn't already been reviewed. If you haven't met your 10 item minimum, then just use your judgment, best judgment, to pick out additional items to check. And you're looking for to verify proper authorizations and approvals to pay, invoices, just that everything is following the procedures that have been outlined that you've already reviewed. Then if your chapter uses direct payments from the bank or debit and credit cards, you'll also want to make sure that there's proper authorization for those and approvals, and that all of those are being recorded in the financial statements as well. When you test income, most chapters, I would say all, most likely, dues is your biggest factor. So you're going to test that. You're going to match the dues disbursements reports that come from NAIFA headquarters. Does that match what was deposited in the bank account? Does that match what was reported in your financials? The same, you'll also want to select one program, probably your annual conference that required a registration fee. you'll look at the registration report. Does what they're showing in fees that were supposedly collected, is that's what's showing in the financial statements? Have, did all the checks that were sent in and showing as paid, did those get deposited in the bank account? You really only have to do one of those, I would say, unless you find something really glaring that makes you think maybe you need to check another one. But I would say just one is adequate. You'd also want to test any other large revenue stream, most likely sponsorships. Do the sponsorships that's listed on the website or in the conference program match the revenue that's reported in the financials and what was received at the bank? And I just wanted to bring up, if you do trade outs, say, for example, with a speaker or some other one that would provide a service to the chapter, be sure to include both the revenue that would be for that sponsorship level and the offsetting expense. And the reason I'm recommending that you do that is because if you don't, then you're using barter, and you have to report that on your 990, and it's really much easier to just make sure to include it in your financial statements. Another item we'd like you to review is the Schedule C of the 990 for the chapter. This is only for chapters who have lobbying expenses. And I think it would be better just for me to show you an example of one, and maybe I can let you know why we're looking for it. So this is part 3B of a 990 Schedule C. So line 1 is going to match the dues figure that is reported on the financial. The next line is going to be the lobbying for the year. And you might also keep in mind that there are ways to make the non-deductibility of the dues a little bit more beneficial to members by perhaps separating out the lobbying payments into when they're actually lobbying and when they're actually like writing newsletter articles for you, updating the board on what's going on, or sending out weekly legislative updates to your members, that sort of thing. Those could all be considered government affairs related as opposed to strict lobbying. And a lot of our chapters split theirs out 50-50. One of my lobbyists that I talked to, he goes, really, I'm about 10% actual lobbying of the members, but you can report it however you want. So just know that as long as you're consistent and document, you can do that. Then you've got the line 3. That is the amount you reported to headquarters as what was non-deductible for your chapter because of lobbying expenses, multiplied by the number of an average number of members for the year. And you'll see in this case, they were not deducting enough, or telling the members that enough was being deducted from their dues, that the portion they were reporting as non-deductible was not large enough. So they have a carryover. And you don't have to make up all of that 14,000 in 1 year. You can spread it out over no more than 3 years. You should have this back to zero or close to zero within 3 years, so as not to raise a red flag with the IRS. And we would want you to report in your review report to the board if there is a figure here on line 4, because this is also something that headquarters is going to want to hopefully work with the chapter and get that figure down so that they don't run into issues. And luckily, we're on to the reporting phase. So the report is going to include the name of the reviewer or committee members, the contact information for the reviewer or the committee chair, the date, could be a date range, but a date of the review, confirmation that the internal controls were reviewed, and you're going to provide a copy of this to not only the board, but also the home office at at NAPA, probably through Justy's team in chapter services. If there's anything that you found during the time that you say, okay, your chapter's doing this, we really recommend you add another layer of protection in this way. Anything that you are going to recommend to the board to improve their controls or their processes or policies. If there was something that required a restatement of the financials, both the volunteer reviewer and the treasurer would want to sign off on those and present those to the board. Then you're going to create or update the permanent file for the next reviewer. That would include the current report, bylaws, policies and procedures, the controls that are in place, contracts and agreements, authorized signers documentation, and any lessons that you've learned that you can present to the reviewer for next year to make their job just a bit easier. And that is all we have.
All right, very good. Do we have any questions that we haven't answered? All right, I'm not seeing any questions. So I'm guessing, Wendy, that you got everybody's questions answered. I hope everybody found this helpful and that you have a wonderful afternoon. All right.
Thank you.
Take care.